Hey everybody, Jonathan Rose. Hope everybody's great. This Saturday, I'm doing a presentation on earnings. It's called Elite Earnings. I'm going to show you exactly how I trade every single earnings period. It's going to be very different than you're used to, but what I want to do right now is I'm going to show you a setup. ATGE. ATG has earnings coming up in the February expiration cycle. I'm going to explain exactly why a trade in ATGE makes a ton of sense right now, and it's just really good risk reward. And then come Saturday morning, I'll explain the entire strategy. I'll explain why it's so important. But in my book, earnings is like Groundhog Day, right? Comes out 4 times a year, every single year. The most important thing, and I learned this as a market maker, is you need to be concerned with the movement of past earnings cycles. So what I do is I have an easy way to back test all the given names that are coming out with earnings. Okay, we don't need to just do a small group. If we scan, we want to put parameters into our scanning software, and then it's going to spit out names that fit within those parameters. So don't just hold yourself to 20 or 30 names. So ATGE, I have it going back to the full 2017. Volatile stock, right? 32, 40, 32, breaks out 46. When stocks start moving like this, and in the last month and a half, it's been very volatile, I'm a big believer that, who knows where this thing's valued at, right? What's the difference between 45, 60 or 42? 45, 60, and 50? Probably not that much, right? So because of this volatility, at least in my book, it does give a higher likelihood of different scenarios of levels that it could trade. But the important thing is ATGE is somewhat a new issue. It's only released earnings twice, so the street doesn't have that much data on it. So watch what I did. I built a spreadsheet and I took all the earnings releases it's had, and it's only had 2. ATGE here, it was trading 31.35 before earnings, right? The straddle was 354, which was saying the over-under on the amount of movement. That 354 represented 11.3%. And then after the earnings were released, the stock moved a max the next day of 17%. On November 2nd, it was trading 36.15. Here's the straddle cost 385 on 11%. And then it moved 15%. So it seems the options were pricing in too little movement the last 2 times. Well, ATGE is expected to release earnings February 6th. Right now, the stock's trading 45, 45.60, 45. The pre-earnings cost is again 11%. Interesting. It's already moved more than 11% on 2 of its previous earnings. Additionally, right now, the stock is acting very, very volatile. So is 11% enough to price in earnings? Well, this is the interesting part. I kind of think it is. I don't think 11% is bad if they're going to release earnings February 6th. There's still 36 days. But not only is it 11% for earnings, there's also 36 other days. So even if we value those 35 days at a nickel or a dime, whatever the decay is, this name right now, because you can buy it at 11%, is very, very inexpensive. And you can buy it expecting an 11% move after earnings are released, but you get to hold it for 36 days. So let's say the earnings should be 11% of the purchase price. So say the straddle should be $5. Well, if you take that out, what would the options be worth if we only have 35 days? They wouldn't be worth 0, right? This stock could definitely move. Would it be worth $2 to the straddle? Expect a 5% move? Maybe. That seems fair. So if these options were priced expecting a 15 or 17% move, that's a big difference in price. If we go over here, that's going to be up or down like $7. That would be a lot more expensive volatility. I explain everything about this earnings strategy in my elite earnings presentation, which is going to be Saturday. This is really important webinar because we do the same thing every single earnings season like clockwork. Those who are telling you to look at previous earnings data and you can get a feel for the direction, hogwash, I say. We know how much movement has come out historically. That's what we know. We're not speculating. Then we want to take that information and value the options into what we see they should be valued at going into the next earnings cycle. Keep it simple, stupid. Okay? We don't have to make things so complex. Saturday morning, 10 o'clock Eastern, I'm going to tell you all about it. But right now, ATGE is really inexpensive. What would I do? I don't know. 80-cent bid on these 50s. 75-cent bid on these 40s. Put that strangle. Can ATG move out of 50 and 40 within 36 days? I like our chances. I'll see you guys on Saturday. Thanks a lot. Jonathan, active day trader.